All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. And happy Friday. Pretty awesome trading week here so far. No real complaints. Been a pretty good trading month here, right? As we kind of creep up towards month end. And certainly been some evidence of, hey, things are going well, seeing the market well, right? Controlling the variables I can control well. Definitely feel like this month has had some improvements, just generally across the board, right? A little bit better at thinking about entry timing, a little bit better on thinking about how to trust or not trust price action. And then still thinking, hey, I'm making some evolutions, I'm making some changes, I'm improving. It's okay to not be perfect, right? As long as we kind of learn from those mistakes. And yesterday, kind of one of those days where got maybe a little bit too greedy on price action instead of taking my win for what it was. Especially once we identified where resistance was on the trade and where support was basically needing to have stepped in. Once it didn't make that move, that needs to be my trigger, right, to get out of that position instead of getting that hopium thinking it's going to sustain. So definitely something to think about. That's kind of what I'm going to focus on here a little bit for myself here this morning. Hopefully identifying strong areas of support and looking at price action from a technical perspective instead of like a fear-based perspective, right? And I think fear in that context can be sort of two things, right? It could be the fear of missing out, right? So the fear of thinking that, hey, if I close my trade here, I'm going to miss the next 1,000 points that runs and I'm never going to make any money. But fear could also be, right, thinking that, hey, I'm worried that a win will turn into a loss or that that's going to be like a max loss and it will be crippling. And I think the reality with our emotions is that they are based on like kind of an irrational trigger, right? They're based on the ability for us to perceive what we think is going to happen, not really what is going to happen. It's not really a fact, right, in any context. And so what we think is most likely going to happen or what we're most afraid of, it's going to be kind of how we see things, right? So what we want to focus on is solving things from a technical perspective, right? Okay, what about this trade is telling me that it's strong? What about this trade is telling me that it's weak? If I see that strong reaction, what do I do? If I see that weak reaction, what do I do? And mapping out those decisions so that you're not judging yourself, right, on your P&L. And just going back, right, to how I traded yesterday. Yesterday, I definitely was judging myself based on my P&L, right? On that sort of trade, there was an opportunity where I was up, $1,200, $1,500, right, whatever it was, and it didn't feel like enough, right? It felt like, ooh, this is going to run to 400. This is going to break down. This is going to do whatever, and I was willing to ignore my technical analysis to chase that irrational feeling because I was afraid, right, of missing out on that further move or afraid of leaving money on the table. And that's a dumb thought, especially when we look at the price action that we've had here Tuesday, Wednesday, Thursday, right? Like it has been a micro range over the last few days. Not exactly any real clear indication of trending price action. So this idea that I'm going to get this massive trend move and talking myself into that, right, is not based on any technical reason. It's based on a pure emotional one. So identify that, right, as a flaw. Study your charts and your trades. Okay, what about them is giving me that hint, right, that I need to be technical, not emotional. And how can I learn from those decisions so that the following day, right, I am emphasizing those techniques. For my perspective here today, right, it's going to be defining and even writing down the elements that I expect to behave as kind of strong elements inside price action, right? So what about the chart is telling me that my idea is strong? What about the chart is telling me that my idea is weak? And really just putting my emphasis into defining those elements here today so that I'm trading things from a technical perspective, right, instead of from a P&L perspective. So that's really the focus for my end here today. That's the thing that I think I left a little bit of money on the table with yesterday. Found that quite annoying that I kind of ventured away from that good habit. And yeah, today's making sure that I kind of revert back towards that mean and kind of get going back to where I need to be. Like I said, today's also month end. So generally month end, right, you kind of get a bit of a theme. If we're looking at what the theme of the month has been for January, not exactly crazy, right? Not exactly super impressive, kind of a nothing burger, right? We're in the middle of December's range, so not exactly anything super crazy going on NQ, and then ES, maybe we can get that breakout here to occur after that little fake out lower. But yeah, let's see how things kind of shape up and if we get an element of enthusiasm. We talked about a little bit already how it's kind of been just like a BS range here so far this week, right? Not a tremendous amount of follow through to the upside, not a tremendous amount to follow through here to the downside. And it's been like a little bit of a nervous market here so far. So the fact that we have been profitable, we've done pretty well, we're making a bit of money, haven't had any losing days here so far is, I think, a really good sign, right? We're just trading the price action in front of us. We're not chasing or trading the price action that we want to occur on a big picture level. And I think really the reality here is to keep focusing on doing more of the same, right? I have a tremendous amount of evidence that when I just focus on those techniques, then I make a lot of money. If I ignore those ideas and basically get pot committed to just like chasing a feeling, I lose money, right? Or give money away. So I've got evidence of both extremes here this week, and I'm not interested in rewarding those negative versions, right? Or that negative kind of side effect. I just don't see the value of that. I don't see how that makes me a better trader. And I'm not motivated, certainly, to see that sort of money get taken away from my account and to self-sabotage my ability to be successful just because I am willing to indulge myself with my emotional triggers. We've talked about this many times before, but what feels best for us in the moment is rarely what's best for us long term, right? What feels worst for us in the moment is rarely what's worst for us long term either. So we have to learn how to overcome basically those emotional triggers and decide that, hey, I'm the one who's in control. I'm the one who knocks, right? I'm the one who gets to decide how I behave, and being afraid, being nervous, being whatever is a decision, and it may be one that you're making subconsciously, but it is something that you are in control of. Being too arrogant, being too confident is that as well. And you ground yourself in kind of finding that happy medium by determining, right, the technical elements of a trade. I was having this conversation with someone last night, and I think this is a important reminder over why we journal our trades, right? We journal our trades not to remind ourselves over how I felt or why I did something, right? We journal them to say, okay, here's how I felt or what I felt in the moment. Is there something now in hindsight that I can see that is either justifying that emotion or is kind of counter to what I was feeling? And now that I see a different pattern than what I saw in the moment, what am I going to do differently now that I don't have that emotional baggage as I'm doing my analysis? So that's really the point, right, of us journaling. The point of us studying our trades is we're trying to figure out if how I behaved was the right decision, and if it wasn't the right decision, how can I make sure I take a different path next time? And then if it was the right decision, How can I make it easier for myself to make that decision again? So there is no value to your trading journal if you're not comparing it, right, to what price actually did and studying the differences between what you thought and what happened and tracking those kind of parameters. So, okay, a little bit of a morning kind of rant that was all over the place. Talked about a bunch of different things there. But yeah, just sort of the stuff that's been top of mind for me here today. So summary, right? For me, focus on the technical elements of the trade so that I am not judging myself on my P&L, judging myself based on how well I followed my trading plan. Step one. Step two, right? Market has been relatively range bound, right? Or choppy or challenging here so far this week. So the fact that I've actually been making money, have been doing pretty well, means I need to keep focusing on just controlling the elements I can't control and not playing the P&L game, but playing the trade my plan game, right? So reinforcing point one with point two. And then point three, right, is that, hey, it's okay to feel emotions and it's okay to feel stressed and annoyed by price action. And then the way that you get over those feelings is you go study post-market close if those ideas were justified, and if they were, okay, what could you have done differently? If they weren't, why did you then maybe feel that, and how can you solve that issue? So it's that kind of three-part process here that I'm really trying to emphasize for myself. I'm seeing a tremendous amount of improvement in my own personal trading when I focus on those elements. And yeah, I've had a lot of fun here trading this month. It's been honestly one of my biggest months I've had in a very, very long time. So yeah, like the theme for me when I started the year off was to focus on those three things a month into the trading year. And I feel like I am seeing good results from that kind of, we'll call it self-improvement, development, whatever you want to call it. And so now that I have a little bit of a proof of concept, I want to double down on those techniques and keep proving to myself that, hey, this is a much smoother, better, calmer, and more profitable way to trade. Pushing, yeah, a little bit over 100K here on the month, right? And I didn't do that in any months last year. So for me, right, pretty fantastic to see that kind of momentum. And yeah, I think when we start to get even more trending markets, should be able to see even bigger numbers based on just some of those techniques. All right. So, yeah, let's start mapping things out here a little bit this morning, right? Let's figure out what we want to do. And yeah, let's go from there. So first things first, right? Economic calendar. Got a bit of Fed speak here. We got PCE. And then we got PMI here at 9:45. I think PMI is going to be a red calendar for us here today. Not quite orange. And hopefully, right, we can keep kind of setting things up and take advantage, right, of that momentum if we do get a like algo data pump here this AM. All right, so what's the count here on ES? Let's start there. Missing my volume, sorry. Yeah, technically a 3 for 3 here to the upside, absolutely. How do we feel about this volume standard? So if we're going to be thinking about what invalidates price action here to the upside, what would that be? Because it's like, all things considered, right? It's a big volume profile. It's technically increasing. It's technically bigger, but it's not like super impressive, right? So, okay, binary, it's larger than yesterday. Awesome. That's really what it takes. But it wouldn't be like contextually, right? We're saying that hasn't really been a huge indication of trending price action in the last 3 days. And yesterday's volume, not really anything crazy different, right, than what we saw last 3 days. So we could argue that that's still kind of consolidation, right? That there is sort of no real difference. So if we get like a failed breakout, if we invalidate that price action, seeing a bigger volume standard than the last 3 days would kind of tell us, and I mean like significantly bigger, that would tell us, right, that maybe the market has a slightly different personality, right, than we've seen recently. And that would be conducive, right, for a potential sell-off or a breakout scenario. So if technically on a 3 for 3, right, I shouldn't be looking for downside trades. But if I see big volume and big volume steps in, that's say up towards like here, right, 80% of Monday, then that's a nice personality change, and I can have that flexibility to trade to the downside. That will invalidate, right, that sort of momentum, quote unquote, that's been established here the last couple of days. And then if not, right, I probably don't want to be super aggressive here to the downside and just play that sort of higher move towards all-time highs. Does that make sense how I get to that conclusion? Or why today's like a reasonable exception to the 3 for 3? Cool. All right, we're going 61. And then 60, 90, 60, 80. Cool. Yeah, I don't think I need to change too much else there. All right, NQ. How do we feel? Oh, the other thing worth mentioning, right? Before I forget, is couple fake outs now, right, above this Monday high. So it also wouldn't be surprising for this pre-market price action, right, to also be a bit of a fake out and push us down towards, right, like that 60, 20, whatever area. So we've seen two fake outs here above this Monday high of day so far. You know, maybe wouldn't be surprising to see it happen for a third time, right? If it's a kind of nothing, no real indication of trending PA week, failed breakout would be, yeah, par for the course, right? Similar idea on NQ. This is the first attempt to fake out, right, above that price. So for sure, if I can get a nice standard here, right, it could definitely push me back down. What's unique about NQ relative to maybe ES? So what's different about its count that gives us more flexibility? And does that make it easier or harder for us to trade today? Yeah, 2 out of 3 here to the upside without volume, exactly. Yeah, so it's less volume than previous day, right? Does that make it easier for us to trade, or does that make it harder for us to trade? And why? Yeah, it gives us a little bit more flexibility because we're formally identifying that it's non-trending price action, right? Or weak trending price action, which makes sense, right? With the consolidation narrative we've seen more so here on NQ, right? Because NQ, we've been fully confined here inside Monday's range for the entirety of the week. So now, right, either a breakout above or a failed breakout gives us a more flexible opportunity to trade price action in either direction, because we don't need, right, bigger volume than Tuesday to be able to play a sell-off scenario, right? So the standard that we need to see from a confirmation perspective is significantly easier on NQ, in either direction, and that should make it easier for us to get a tradable opportunity here. And then to the downside, right, we'll call it 21.7. Cool. All right, CL. Kind of a gross candle there yesterday, right? Doji, fake out lower, doesn't close under, increasing volume. Candles kind of opening up in the middle-ish of that range. So technically, right, a 3 for 3, but we're going to call this a weak 3 for 3. Weak, right? Candle shape, increasing but non-outlier volume, right? Again, that's weak. And then can't close under that previous low of day, right? Or previous low of range, we'll call it, which again, right, weak. So not a super strong sign from the old bears. I don't know if anything needs to change here, to be honest. Just apply a strong volume standard here, right, for CL. All right. So Apple, big gap up here post earnings. Attaboy, Apple. Nicely separating now away from that 200 EMA. Don't know if a few of you guys took that swing trade. I did not, but I think a few of you did. If so, you're in great shape here. So good luck. Keep it up. And this is going to be a, I mean, this is a textbook Bollinger Band reversal setup. 2 out of 3 to the downside with volume. Okay, Tesla, pretty gross. Technically a 3 for 3 here to the downside, but setting up as just kind of a day of consolidation, right? Maybe yesterday looks a bit like a capitulation candle. Big volume breakdown, can't crack under the trend line. To be determined. And we'll call it, basically just looking for the wedge breakout now, right? Okay, Microsoft 418. Bounced off the old trend line. 2 out of 3 here to the downside with volume. Still haven't added the remaining 2/3 here back to my position. Still just holding on to this key element, right? That 1/3. If it breaks down maybe under this like 410 area, I will get out on that remainder. So, Chris, I'm personally trading the futures. So I pretty much only personally trade the ES, NQ, and CL. So E-mini, NASDAQ, and crude oil. I look at these individual names because they're the largest market cap weightings in the ES and in NASDAQ. So it kind of gives me a rough idea over what the internals are looking like. So the more consistent the internals are, easier it is for me to get a consistent narrative here on the index level. So I review these individual names to basically give me context over how strong or weak I anticipate the price action to be on the index. Okay, Amazon, red candle, increasing volume, gap up. Not great looking. A lot of 2 out of 3s with volume here. Kind of a weak one. Okay, AMD. 2 out of 3 here to the upside without volume, same thing. So we're still looking for that bottom up gap fill. Bottom up sounds like a I don't know, some lewd term to the downside here, right? Basically like a fake out yeah, gap fill failure in the breakdown. I don't see that needs to change. All right, NVIDIA. So 1 for 3 here, just looks like non-trending price action. So still same thing to the downside, 116. Yeah, not much, too much changing here. Okay, Meta. Setting up as an inside bar here, right? 2 out of 3. Oops. And I'm just saying it's setting up as an inside bar because the implied open, right, is in what looks to be the middle of yesterday's range, right? So the amount of room it has to go before it breaks out or breaks down, it's hard for us to maybe anticipate that happening very, very easily. To the downside, though, under 675. And eventually, if we can get above 711, it's got some enthusiasm. Okay, Netflix still hasn't broken out or broken down from that Wednesday range. I'm basically waiting to see that to happen, right? So a $1,000 breakout or a 950 breakdown. Either one of those scenarios would be interesting. Okay, Google, 3 for 3 here to the upside. Attaboy, Google. And so we're just going to look for a breakout here past all-time highs, right? So a 202, it's called an ATH breakout, right? That would really be the only narrative here. And I'd say strongest 3 for 3 we've probably seen. So no super into, like, not a ton of motivation, right? To basically assume that this thing is going to reverse nastily. VIX, 15 spot 3-3. Man, remember how scared everyone was on Sunday night? Oh my gosh, DeepSeek's gonna take down the market. A little bit premature, right? Maybe a little bit premature with some of those emotional reactions on social media. So if we're gonna be thinking about what the indexes are telling us versus what our leading names are telling us, what do we kind of think of as like a general story here today? In my opinion, right, it kind of feels like we've got an attempt to break out from consolidation on the indexes, and maybe a lot of our leading names that are either in like the middle of the range, right, like in Tesla, for example, right, a Meta, for example, right, like an NVIDIA, for example, Netflix, for an example, right? So a lot of names that are maybe lagging behind the potential breakout, and then a few names that have like an overreaction move that maybe it's a bit of a mean reversion. So we'd like to see these narratives basically sync up and get consistent for us to trust that this momentum on the index level is going to sustain. If we don't see those narratives kind of sync up for that upside breakout, then probably the most likely scenario or trade that we're going to get is going to be like that mean reversion back in towards sort of the end, or sorry, the middle right of this week's range. With end of month also in play, right? You tend to get a lot of like portfolio rebalancing type trades, right? So we'll see where that kind of comes together, how people want to position themselves for month end. But yeah, it should be a relatively interesting morning. So hopefully we do get some nice price action and we can take advantage of whatever momentum is available to us. So markets have opened here. We got about 2 minutes till this candle closes. I'm just going to go take that 2 minutes to spend a second or two here visualizing a successful trading day. And then we'll jump back on here in a couple and we'll set ourselves up to absolutely crush today's session. So we'll be back in a minute or two and we'll chat then. All right, so back. All right, let's see how this day shapes up. But yeah, good morning, everybody. Hope you're all having yourselves a great day. Ready for what should hopefully be a fantastic finish here to the week. And yeah, let's see how things kind of come together today. So far, so slow. We've got data at 9:45 here today, right? And then that's it. I don't think there's anything at 10. So I might just have to wait out that 9:45 data, right? All things considered. Yes, first little fake out lower here potentially. Does feel like everything's moving a little bit in slow motion today. I don't know if that means I haven't had enough coffee. I don't know if that means that the market's just moving slow. But that's definitely how things feel right now. Hey, good morning, Manjeet. So, personally, I have 3 screens that I'm using. You can see this one here, right, which is where, honestly, I do 95% of my analysis. I pretty much only look at the charts here. I then have like a screen to my right where I do all my executions. So I've got 3 order windows that I execute in, and so that takes up another screen. Then there's also like some stuff there that is for like running the Discord and the OBS and just like monitoring my settings. Just make sure everything's working fine. And then I've got a screen above that which has like the YouTube chat, the Discord chat, and basically like if I'm trading NQ, then I'll have ES there, whatever. I personally like that third screen's a little bit overkill. I don't need it. For myself, I personally just need 2 screens. That would be probably all I need. One for executing trades and just managing extreme settings, and a second for just doing all my analysis. If you want to use your own charts or different setup, no problem. There's a million different ways to do that, so really up to you. So we got data in 6 minutes. See how this goes. Again, no real rush to do anything. Volume isn't telling me. I feel like price action's not moving here yet. How's everyone's Friday so far? Doesn't sound too bad, John. Nice, Mike. Any big weekend plans? All right, so 3 minutes here. Nice, Norm. 3 minutes till data. Maybe that kicks up a bit of a fuss. Huh. Well, good luck, Steven. So, Anthony, if you're going running in the snow, general rule of thumb is you'll be like 15 degrees warmer once you start moving than what the temperature is outside. So what you want to avoid the most, at least in our neck of the woods, is sweating and letting that sweat freeze. So you really got to control your layers and your heart rate. So really the only thing I have here probably for now would be like an ES fake out. Don't really have one on NQ here. CL's, I don't know what it's up to. Yeah, that, I mean, 72 degrees sounds wonderful, but the foot or the inch of snow. Yeah, great question, Joe. So, I think just Bollinger Bands give you a good idea of, like what an expected type of move in the market is, right? So, fat bands kind of tell you that the move has maybe happened and that price action is extended. Really compressed bands kind of tell you that, you know, you're looking for a breakout of that consolidation. So I think that they can be a really helpful tool in finding kind of either mean reversion trades, or when you get high volume breakouts away from fat bands, it kind of tells you that you're in like a little bit of a squeeze mode. So I think it just gives you a nice visual representation over the path that price action is going to potentially move. They were the first thing I really ever ended up trading. So I think you pair them with our opening range, and you've got a pretty good little technique you could use. I hear that, Greg. Yeah, I think it's supposed to snow quite a bit here today, too. Hopefully not too much. I got a long drive tomorrow. So yeah, breaking down there. Biggest volume we've seen in a while. So let's see how this thing closes. Hey, thank you, Rhonda. Appreciate that. Just like Bollinger Bands, David. So, you know, playing high volume breakouts or high volume breakdowns away from the opening range. You could use your bands as a target or as like a bias towards which direction. So this would have to be targeting 72, right? That's our first level here. So if we're going to get the pullback technique, you'd want to see resistance step in around that 72.46, right? Previous low of day. Otherwise, now on the aggressive, we're going to struggle a little bit because you'd want to see low of the confirmation candle, right? Act as your support. But an entry off of 72.22 doesn't give me the risk reward requirement that I need to hit that 72. Yeah, so you'll take, Jay, you'll take the opposite trade. So say you're long 2 contracts, right, on NQ. If you go reverse, you'll be effectively buying 4 contracts, closing out 2, and opening up 2 with the opposite of your position. So you'll be selling 4 contracts, right, if you're long 2, buying 4 contracts if you're short 2. 2 to close, 2 to open new in the opposite. So in my opinion, generally capitulation, especially on a daily time or like on an intraday time frame, usually ends up being like a big move with limited volume, where a move happens very, very quickly, where it's just like the floor got pulled out from it and there's no like only gravity basically in the way. On a daily time frame, you can kind of notice it pretty easily with like big bearish candles. You can kind of see the ones that stand out. They're like kind of like the I call them like fuck you volume. Yeah, it's easy to see in hindsight, right? So those like really big pops that kind of stand out like a middle finger often kind of look like capitulation. But on an intraday candle, for me, it generally feels more like a yeah, like low volume, bigger move than you expect, like a low volume 60-point move or something like that. In general, like the point of the outlier is, yeah, there's going to be times where outlier volume acts as capitulation. There's going to be times where low volume moves end up continuing. So I'm not solving for like 100% with that, right? Like nothing is ever going to give me a 100% signal. So I'm solving for what's the most likely outcome based off of that. So it's not going to cover every exception. And if I try to solve for every exception, I'm just going to create analysis paralysis, I think, where like I get in my own head, hey, is this the right time to do an exception? Is this the right time? Is this the right time? And then I'll miss the move because I'm thinking about 20,000 opportunities. So CL looks okay for now. The problem with CL is that there is just no easy risk reward requirement to get down to 72. So yeah, just like to justify taking this trade, maybe we can get on the 5 min. It's just going to be tough to get the risk reward ratio we want. So it's maybe not that it's oversold. So I look at it from a daily perspective, right? It still seems like it could maybe go down a little bit towards yesterday's low of day. It's just that maybe from like a short-term execution perspective, maybe not enough left for this next immediate level. Again, I mean, like my favorite thing to trade is NQ. It's my favorite, probably by a magnitude of 20. And I do think that it's probably the easiest to trade here today. So if we get outlier volume on this candle, for example, right, we could be in play. Has some work to do. Everything else kind of looks a little bit crappy, to be honest, so far. I mean, we had our biggest win of the year was on ES, right? So I'll trade whatever. But if I'm going to trade ES versus NQ, the moves on NQ were bigger. So you can get a better setup, in my opinion. So what's missing about this setup here so far? What's the missing ingredient on NQ? We got the arrow under the candle. But what about it on the 3 min isn't good? Yeah, it's the volume, right? So the volume is increasing, but it's not outlier. So in that situation, right, we do what's called passing the burden of confirmation, kind of like Samuel was saying, right, where it's setting up on the 5 min. So now we're looking to possibly get a look here on the 5 min time frame, and we'd like to see previous high act as support here for us, right? So we want to see it break out above that high and then pull back into it gently. Or alternatively, right, if we get that pullback entry, so we'll just do 2 fibs here. This will be a little bit confusing maybe, but hopefully not. Otherwise, right, we're looking for probably a pullback into the high of the opening range on a pullback technique as our entry, but that's going to be challenging, right? Because our stop loss then needs to be 36 points approximately, and a 36 point stop loss with one contract is $720. So Jay, it's going to be dependent on how big your stop loss is. More so than just like a blanket X amount. In my opinion, I trade with 150s, right? And I'm mostly starting off my trades on NQ with 1 or 2 contracts. And I'm trying to risk no more than $500 a trade. So it'll depend on how many ticks your stop loss is. With NQ, right, each tick is worth $5. Okay, so now it would be like this if we're gonna go, if we get the aggressive. And then once you're pyramiding in, it's a different story because you can increase your size without increasing your risk, right? No, Manji, all the arrow tells me is that I have a breakout outside of the range on increasing volume. So it's telling me that I have an active setup, not necessarily that I have an entry. So I basically just coded this up so I could backtest my strategy and visualize it a little bit better. If I'm looking at my ORB graphic, it's basically this high vol breakout that it's showing me. Okay, so where's the next logical spot where we could find maybe support? Maybe like that 820, 825 area. And again, inside bar here doesn't kill me, right? An inside bar doesn't invalidate my setup, doesn't invalidate my idea. It could still give me the aggressive entry technique here. But so far, price action is telling me, hey, be chill, be slow. You haven't missed out on anything, right? CL does hit 72, but just no easy entry for us. Okay, so let's see if this thing holds up in the next 30 seconds or so. Right, at this point, we don't really want it to break out. We want it to finish as consolidation and then break out on the next candle so we can get a more likely entry, right? We'll be close. So that yellow line is going to stay in place. Ooh. Held just above. Now you want to see this act as support. Okay, so I can start to look at this maybe. Stop loss of 64. And now we want to see a gentle pullback. For me, this would be a one contract play. Just watching here very carefully, right? I don't know if I've seen a tremendous amount of like enthusiasm here yet. Might give it to me here on the 3. But so far, no entry. Well, I don't know if I have like an ideal entry price. So I'm basically looking for a pullback into that yellow line, right? That's where I would wanted to have seen support step in. Don't know if I saw like the perfect reaction at that. So for now, I don't have one, Norm. It's always the point where I'm risking less than $500, right? So in theory, anywhere under that green line to my red line was a good entry, right? From a risk reward perspective. So now we can change this up a little bit. Go to 22. And now we want to see that yellow line, right, act as support. So that's that 907.50. So that would be, right, on a breakout above and then a pullback into it. My ideal entry price now would be 907.50. Right? So enthusiastic breakout above, pull back into previous high of day. Use that as my area of support. Okay, and we'll call it like 95 as a stop loss, right? Okay, so far that acted like resistance, not as support. So let's see it try to break out again. Okay, now it has to be a little bit lower, 89.25. It's called 89. So again, now we want to see that yellow line act as support and then a gentle pullback into that line. And anywhere between, say, 914 to 889, right? I'd be risking $500, right? So that's fine. Yeah, I mean, depends on what account you signed up for, Jay. But yeah, all the rules for how much you have to make will be on that prop firm website. I think on the 50K account, it's 3K. Okay, so a little bit of a breakout above, but not acting like support yet. See how it hit that yellow line and then just kind of gets stuffed, right? Like it gets in molasses. We want to see it go above that yellow line and then pull back into that molasses state, right? So every time it's gone over it, we've seen kind of like a muted, like a arm punching through goo type move versus being like pure unadulterated enthusiasm. Same thing. Now we can play this on the 5, find enough candle. Yeah, she's awesome. I love NQ2. If I ever get a boat, I'll name her NQ. Yeah, her Grace NQ. I like that. Oh, yeah. No chance I'm buying one in these winters. Oh my gosh. Everything's frozen over. Yeah, for sure. Still nothing here. A good decision by the looks of it so far to have not taken this trade. I can maybe do this. It's starting to get kind of greasy. This would be your next point where you're looking for it to find support on the 10 min. Now, the concern, right, is that, hey, it's made a pretty big move higher relative. If bulls were that strong, why are they not, like, continuing this move, right? Like, if bulls are strong, why are they pulling back? It's a good reaction, though. Tw 20 seconds to go on this candle. I think I'm going to talk myself out of that. Okay, so we might be back on ES here. What's the low of this candle? 85 versus 12. Ooh. So I'm going to go ES. The risk reward here is not perfect. You're only risking a 1.5, which is beautiful. Or a 1.75. So stop 134. We'll call it 134. I need a gentle pullback into 35.75. So let's see. This could be 5 contracts here. So far, not gentle. I don't know if nervous is the right term, but I'm really watching NQ's reaction at 900. Maybe that was the entry. I still think this is in play. Okay, so same thing here. Now back to NQ. Just got to find support here. So far not doing it. This could be a double fake out maybe instead. Stop of 925. So you'd need to get up and over 900 as a possible entry. Yeah, good call on ES. So far, so quiet. Okay, if I don't place a single trade here today, it's been a great week, right? But yeah, now a possible fake out is probably what's catching my eye the most. It's a double fake out. Excuse me. So if my stop loss needs to be 927, right? My order entry window starts on an entry above 900, right? 902. Ideally like that 910. And just a classic green to red reversal type setup here. Double fake out. Yeah, but you can calculate the ticks easy, Jay, right? So there's 4 ticks and a point. So generally, right, if I were to enter in at, say, 910 with a stop loss at 927, then I know that my stop loss is 17 times 4, right? So that's what, 64 points? Or 64 ticks? Or sorry, 68 ticks. There we go. Okay, so starting to watch this. Like I said, stop loss 27. Again, this reaction around 900 has been very slow. Okay, so still watching here. Come on, 910. So just watching this, I mean, I feel like I'm holding my breath, but finger on the trigger, right? Watching just how exhausted basically this move looks. So if it continues to climb slowly into that range, right, cool. If it flies through that yellow line, I have to have the discipline to not click submit. Again, pretty low volume here. So again, giving me maybe more confidence that bulls aren't strong, right? You're not seeing a ton of them defend 900. So, clue number 1 is good, but now we need to see clue number 2. And make sure we see sellers basically defend fake out 1. So that's lowest bar of the day by a million. Little inside bar. Come on. So right now, low volume is a good sign if I want to play this fake out rejection thesis. If I saw a really high green volume, I would be nervous. That doesn't feel super logical. Neither does that. So yeah, still on hands here. Again, maybe could have gotten that 908, but I said 910. Don't think my setup is dead here yet. But again, we need to be very cautious with that rejection. So still got to go, 20 points, right? It's a lot of room to play with. And the volume really feels like it's dried up. Yeah, it's been the general theme this week though, right? If we look at the daily chart, looks crazy when you're super zoomed in, but the last like 3 days been really indecisive, small ranges, not very enthusiastic. So sometimes it just behaves like it always has until you get a proven otherwise. No real proven otherwise here yet. Okay, so this candle, right, is definitely going to close as increasing volume. But as an increasing volume standard, it's still going to be pretty pathetic, right? So I'm not going to put too much stock in this if it's green volume, or too much stock into this if it's red volume. So still looking for that 910 and that reaction at that price. You know how like people fall asleep to like whale sounds and stuff like that ambient noise, or there's like playlists like facts to fall asleep to. Someone should make a playlist NQ price action to fall asleep to, and just use this. Yeah, give you nightmares, absolutely. Okay, 7 points away. Let's watch. Yeah, that's fine. I mean, technically you could get an entry at 905, right? But it's getting stuff, but then not really separating through that, right? So I still wouldn't be surprised to see a little fake out above. Or, right, if it does end up being our point of resistance and we get a big volume bar to sell off, then I can play this candle as my setup, right? And then the high volume bar as my confirmation. Right now, it's like just a double fake out. So this is setup, right? Fake out one, failed breakout, right? Confirmation, failed breakout number 2. I don't know if it's because it's a Friday, it's month end. Yeah, usually expect month end to be a little bit crazy. But I think it's just sometimes markets are wild, sometimes markets aren't. And markets are digesting a lot of news here this week. So generally when there's reasons to give lots of people different opinions, it's basically just squabble, squabble, squabble until one side gives up, right? So we're kind of seeing a little bit of that here while markets digesting the DeepSeek, the carry trade, all the earnings narratives, right? The lack of a rate cut or really strong guidance post FOMC. So we've had, you know, a dozen or so pretty big headlines. And with all of those all kind of combining, right, it just creates 50,000 scenarios, and the market just doesn't know which one's the winner yet. And it's a good reminder, right? The market doesn't owe me action. It just owes me the opportunity to sit and watch. Not every day is my edge going to be accessible, right? There's going to be times where you just get no setups and price action moves without you or without following your rules. And then that happens, right? So it's not personal. It's just that we're not playing a game where it's, you know, guaranteed to get a pull at the slot machine, right? I mean, if it's really slow, I mean, there's no point trading and watching. It's only 10:30, so it's maybe a little bit too early to say that there's not going to be any action here, because I'm still within 10 points of a possible entry. But yeah, generally the longer a move takes, the less likely it is to occur. So at some point here, it'll be one contract ran, right? It'll be 17 points. Right, as a stop loss. So 17 times 20. So let's see here. I'd still be risking, right, more than 500 bucks if I bought 2. So there's that first attempt here at 9.10. Let's see this reaction. Like to see it get stuffed here. So far hasn't. The other alternative, right, would be the fake out above this, right? So an aggressive move above current high of day and then a breakdown back below. That might allow me to get larger sizing. Again, we've been so patient here so far this morning. There's no reason to be hyper aggressive quite yet. That's a better reaction. Yeah, so I am watching ES here in the background. Not exactly a tremendous volume profile here yet. But yeah, definitely giving me reasons to be patient. So I think that probably the most likely entry, because this yellow line hasn't really acted as resistance. It makes it harder for me to say that I want an entry off of 910. I would probably now want one above high a day. Right, so a breakout above high a day, that move isn't able to sustain. And then an entry on a move back under 925.50 or whatever it is. Main difference between stocks and futures is the leverage you get with futures, right? So NQ gives you blanket 20 to 1 leverage. ES gives you 50 to 1 leverage. Stocks with a margin account, maybe you can get 3 to 1. It could very well sell off, but we want to trade our plan, not our feeling, right? Because when we're wrong on a feeling, tends to be really hard to get out of those positions. So let's see now if we can make a little higher high above, right? And then a quick sell-off back down under with the stop loss then at the high of the fake out. And that, Rand, would be probably more likely to be 2 contracts than 1. Because ideally, right, the little move above is only a couple points. It's nothing crazy. Okay, so still watching here carefully. Okay, there's that maybe move higher. Let's see. Want a little bit of a bigger space. Well, that for me just tells me probably most likely to be a day of consolidation versus a textbook trend day, which probably makes me a bit more confident in a mean reversion setup versus a textbook breakout trade. So now stop would be 934. But it's got to get back under, right, that yellow line. Okay, no longer a fake out, right, because it held above high a day. So it's no longer in play. So now we're looking at a possible ES play. 3-min time frame targeting 150. Stop loss 140.25. And you're looking at 4 contracts here. Okay, too fast on that pullback. So again, now we're possibly setting up fake out 1. See if we can get fake out 2. back in play. Stop loss held on this. Yeah, I don't think I'm going to be able to trade ES here to the upside. It's not behaving the way you'd expect. So we're back on that fake out grind here. So let's wait. Okay, so that's fake out one possibly, right? Let's see if we can get second one. Okay. So now we want to see fake out above this high, so 940.50. And then it would be on an entry back under. Let's just see. Still no fake out above. But yeah, be ready here. This thing can move quick. And again, if the trade doesn't behave exactly the way that I want it to, or the way that my plan dictates, then I should have no problem sitting on my hands, right, and avoiding that price action. If a trade is strong, it'll give me more than one chance to enter. I don't need to be pot committed to like the first idea I see, right? So if we get strong candle here, right, increasing outlier volume has a chance, then we can look to play this breakdown. If I don't get that fake out, no worries. I can sit on hands and give my dog a belly rub. I'm not here to make a tremendous amount of decisions, right? Or I'm not here to force P&L if things don't align with my technique. Because as much as I want to think I've got a good feel for the market, I've got a good bias, I've got a good whatever you want to call it, relying off of feelings is a very quick way to blow your account. It's not super sustainable, and it doesn't historically lead, at least for myself personally, to any long-term progress. It maybe gives me a couple short-term wins, and it feels awesome in the moment to be like, ooh, I feel like this is going to sell off, and then going short and it dumps, and oh, you do whatever and you make your money. But the next time you have that feeling, it's going to go rip higher on you, right? And it's not going to give you any of your money. It's going to take more than what you made. So I'm not here to reward my impulses. I'm here to just simply trade my strategy. And I cannot hold it against myself that price action moves without following my rules. Because my rules aren't there. I mean, they're designed partially to make me money, but their primary objective is to help me avoid going on tilt, avoid the worst versions of my psychology. They are there to protect me from myself. So if I have to, I don't know, basically take like a motorcycle down the freeway, and I'm going to bob and weave between traffic, but I'm not wearing a helmet. Yeah, it's going to be a thrill. It's going to be a lot of fun, but each time I'm wrong, it's fatal. So I'd much rather be just a little bit more disciplined, a little bit more patient, right? I don't have to bob and weave. I can take it slow. And the reality with trading, right, is if you can avoid those big blow-ups, those big self-sabotaging moments, you make so much more long-term because your ability to compound then actually exists, right? You don't have these events that destroy 2 or 3 weeks of hard work. And when you can put together that month, right, that 2 months, that 6 month, that year, right, of compounding, that solves the problems that you're trying to fix by doing it all in one go. So yeah, so far no bueno here. And again, if a trade is strong, it'll give me more than one chance to enter it, right? So I don't need to be in a rush here. I don't need to force an entry. I don't need to do any of these things. Like, I think that's, I'm getting maybe a little bit introspective, but one of the things that took me a long time to learn when I was trading is that I wasn't competing against the market. I wasn't competing against other traders. I was basically competing against my impulses. Right? When I'm better than those like intrusive thoughts, or when I act rationally in spite of them, I make a lot more money, and then can honestly start to compare myself to other people if that's what I so desired. But trying to catch up to like the guy who I compared myself to earlier, this guy named Aaron, and trying to catch up to someone like Aaron, who was really, really talented, killer trader, but had been at the game for, 7-8 years by the time I met him. And I was expecting my day one to be like his day 10,000. Setting myself up for failure, right? I was creating unrealistic expectations. And so when I started thinking, okay, what can I do better on day 21 versus day 20? That got me closer to his day 10,000, right? I didn't spend 6 years in between, right, trying to learn that I'm not him and that I need to fix my own problems, not fix the ones he had to fix. Okay, so still watching here. Like the chasing the performance, right, or matching the performance occurs when you solve the things that are slowing you down, right? When you remove the speed bumps. And the more you focus on, removing the speed bumps, the faster you go. Because what happens, right? Even if I'm perfect, if you've got things that are costing you money, you got bad psychology, you don't trust your winners, you refuse to cut your losers, right? And you average down into losing trades, whatever it might be. What's going to happen is you're going to cut your winners quick, and you're going to let your losers drag and hang out and all this kind of stuff, and you're going to screw up the ratios. So even if I was 100% perfect on all of my trades, you'd find a way to not be 100% perfect. Because this is what the market makes us do, right? It makes us want to self-sabotage. It makes us want to do what is easy, not what is profitable. And what's easy, right, is falling for our worst habits, right? The stuff that we've been programmed for our entire lives. And that's one of the things that's so difficult about trading, is that it is so contrary to like how you were taught what success is, right? You're taught, oh, I gotta do a lot of work to be successful. And so you think, oh, okay, if I place a lot of trades, I'll be able to trade through my problems. That's not the correct interpretation of work. If I just spend 9 to 5, whatever, meet the right people, find the right mentor, it can all help. It can all speed you up. But the decision you make is independent, right? It's not like you can just join a good Discord or a good group and all of a sudden you're going to be profitable. But you could join a startup, right? And irrespective of your role, you know, maybe your equity vests in 2 years and you make your money just because of the power of the collective. Like one of my favorite sayings about trading is that we're all in this together by ourselves, right? So yeah, all of our own problems are unique to us, and all of our P&L is unique to us too, right? And so the sooner we start playing that game selfishly and look internally to fix ourselves, the sooner that we can be a very, very strong group. And I'm very proud of the improvements and the work and the P&L that this group kind of consistently puts out. I think we're on the right path to have just a group of tremendous killers. But it's because those individuals have chosen to be incredibly selfish in their pursuit of their freedom. Okay, so still looking here, right? Fake out above, quick pull back under. Let's see. Okay, let's see if we can get it. Come on, so close. Hey, happy days. Fucking pansies. I can't stand the current Canadian government, Jeff. All they do is cost me money. Okay, so we're still watching here. Now give me like an overreaction move above. Oh, Eric, I can't wait to get out. The American visa service it's taken a very long time. I should have just driven up from Mexico. Maybe I could be a refugee. A political refugee. Damn, that's surprising for Vancouver. It's gonna be a nasty summer then. Okay, so again, let's see the big fake out above. Now we want to see it dump off, right? I'm in Montreal at the moment. Tomorrow I'll be near Kingston. Okay, so starting to not behave like fake outs. Yeah. I don't know, be sorry guys, no DTR stream. I'm in a nice truck. So, I mean, you don't want, like, the candle that goes into it, you don't want it to hold above. If it holds above on increasing volume, cool. If it closes under on increasing volume, cool as well. Because, you know, then a lot of that volume is going to be effectively the selling pressure, right, above your fake out spot. But this is now a breakout scenario. It's 10:58. It's not perfect. Yeah, I'm trying, Jay. I'm trying. Going through my visa process at the moment. So now we're looking for a long 40, say 54 to 40. Sorry, whoops, 47. Targeting, we'll call it just round number here. Stop loss have to be 47. Again, looking to see that yellow line act as support before I'm willing to jump in. If it fails, right, then again, we're back in business on the second fake out setup. The only thing that would change the second fake out is if this closes as increasing outlier volume. 15 seconds to go. Maybe unlikely. So yeah, we're still looking for a 2 candle fake out. So that's fake out 1. Now you want to see fake out 2 above 57. Just to build off of your comment there, Eric. So what ideally you want to see, right, is for that fake out to have occurred after a failed breakout, right? So it's like if we had confirmation here to the upside, like I'd say we had there at 10:54, we're expecting that to occur on increasing volume, right? The confirmation. We want to see our quote unquote confirmation candle fail with a fake out higher and then play the double fake out. So if we're looking at it as like a 3 candle setup, right? Part 1, failed breakout on increasing outlier volume. Part 2, fake out above that. Part 3, second fake out above that price. Okay, so let's focus here. See if we can get a quick move higher, right? And then a breakdown lower. Then can look for a short. Still not super convinced. Basically want to see this move fail again, right? Okay, so stop loss would be 962 for now. Still think it might have a bit more juice. Come on. And this candle has to close under that yellow line here, right? Has to. Otherwise, again, it invalidates, and maybe we start looking for breakouts again. So that's an invalidation. And now we're back to that breakout grind. Okay, you're looking at something. I keep doing this the wrong way today. Can I get it on a different time frame? I could maybe do this. Again, stop loss 967. And we want it under 57.25, right? So now breaking down, we want to see a gentle pullback back and towards that 57.25. So let's see if it's got the legs here. I hope not, Topher. I hope not. I got a vicious guard dog if they're listening. Okay, let's see here. Again, this can't close above that yellow line, right? That's the other thing we're watching. Okay, fine. Come on, come on. Okay, so watching very close here. Be a 10-point stop loss approximately, right? So I could go 2 contracts at that point. Oh, this is killing me here. Come on. Jeez, did not give me a fill. I have 57.50 as my submit price. Let's try again here. Cancel orders. Oh, that is mean. Oh, that would have been the perfect entry. All right, reset. Okay, so I am in short here now. 59.75. 59.75. 2 contracts. Stop loss at 67. $959.75. So pretty good entry here so far. Gosh, that took a lot of time. All right. So let's see if this thing's got the legs here to break down under 50 and give me some oomph. But so far, so good here. So far, so very good. Who else is in this with me here? Beautiful, team. Beautiful. So far, right? Quick $700. Let's see if this thing can keep breaking down. And what we don't want to see here now, right, is a fake out under this 36. So we want to see it flush through previous low candle and give us some nice follow through. And if it fakes out and closes above, right, I'm going to look to get out of this trade and just take my money for what it is. So far, so good, right? $800. So let's see if it's got the legs here. Cannot complain about this start. So again, right now it needs to close under this red line, we'll call it. That's the Alamo. If it doesn't close there in 35 seconds, then I'm going to look to get out of this position as my P&L is increasing, right? Okay, 5 seconds, so probably isn't going to close, right? So I'm going to look to the next, like, quick little flush lower. I'm going to look to get out. Come on. Yeah, I'm watching it, Topher. I'm watching it. Come on, come on. Get under 50. Come on. Tried to make me feel like it was going to flush there. Last chance. Come on. All right, guys, so I am out of this trade here, right? That quick little first flush lower. Close price of $943.25. And that's plus $658.24. So that's not too bad. And a good decision, I think, by the looks of it. And quick little rip. All right. Hey, that's awesome work, John. Great exit. Pretty much bottom ticked it. Fantastic. So I'm all out of this trade, guys, right? Puts me 1 for 1 here on the day. Quick 650 bucks. Let's see if this thing can maybe set up again here. But yeah, no real enthusiasm post separation. What was your close price, Norm? Okay, it's better than my close price. Nice work, Kiki. 400 bucks to finish off the week. Not too shabby. Let's go, Rame. 650, my man. It went down to 935. 933.75 was the low post entry. So yes, it did, Masad. Congratulations, John. Have a great week, man. So maybe you have delayed market data. That would maybe be the difference. What are you talking about? Even the low of this candle is 941, is 942.50. So, what are you talking about, man? You want me to email you my execution? Perfect, yeah. So guys, I'm not here to lie or mislead you guys. That would be very unfair. Yeah, have a great weekend, David. And well done, Norm. Have a great week, man. Yeah, no complaints. Great green every day here so far this week. One red day in January. Cannot complain about that. Yeah. Hey, 300 bucks, can't complain. So again, if this trade ends up being strong, right, we can always take it again here on a secondary stab. But our initial reaction, right, post entry was telling me, hey, it's not quite ready for the breakdown. So just get out, take your profit, reset. So, Antonin, this is a fake out thesis, right? So, on this 5 min, it's making higher highs, but not able to hold above the previous high of day. So, it's a failed breakout type setup, right? So, failed breakout occurs once. We see price fail. Fail breaks out twice, right? We see it fail again. We know that bulls are no longer strong, and we're looking for continuation here or reversal of that trend. There's a video posted in the Discord maybe last week that breaks down this thesis in a lot of detail. So I'd recommend just watching that. Let's go, Norm. Congratulations. All right, so now the short's starting to come together. Let's see if we can get that high volume breakdown. Hey, no worries. Oh, maybe we'll get another setup here. And we'll see if it can break down some more. Would have been a lot nicer now, but no reason to have held on to that initial entry. Nice, Jay. Well, be careful trading this because there's not a ton of range here. So just be a little bit patient. It's going to rug at some point. Yeah, so, you know, price action isn't moving really nicely. So I'd rather, like, sit on my hands, right, than drain mental capital. Like, I'm dreaming of seeing the stars again here more than I'm dreaming of seeing a huge P&L day at this point. Thanks, Joe. Appreciate that. Have yourself a great rest of the day, man. Great week. Considering the move the market made, great, great week. All right, team. I don't think I'm going to stick around for too much longer. I don't see enough volume showing up here to tell me I need to place another trade. Maybe on ES. He's technically enough. On ES. I don't know if I want to take another shot, to be honest. Nothing I've seen here has told me, hey, this is going to be smooth sailing. So yeah, I don't think I'm going to place any further trades here, team. Been a great week, right? Been a pretty good day. I would say that this month has been relatively successful. So, not counting today, 65 trades, 37 wins, 28 losses, a little bit over 100K profit. So pretty good month, I would say. The reason why I think the month has been solid necessarily hasn't because the market's given a tremendous amount of range. I don't really think that that's the reason. It's just that I've been putting a really huge emphasis on basically losing really small, right? So I've basically halved the size of my max loss this month versus what it was January 2024. And pair that with being able to pyramid into a few trades, which we haven't seen any examples of here this week. But that just gives me a much better return on my risk that I'm taking. So I don't know if it's necessarily that the market has given me a ton of extra options. I think it's just been I've been a better loser this month, and I've been better at building up my winning positions. And so both of those things combined have led to a bit more P&L. And then you pair those decisions with extra leverage. So like I trade with 650K accounts. So like today, right, $650 day, you know, you're looking at nearly 4K, right, on the day across all accounts. And so that just starts to stack up and compound very quickly. Like I think, like what's important to figure out about trading is you have to create that proof of concept, right? So, okay, here's how I can manage one account. Here's how I can manage one contract. Here's how I can do this. And then it's very easy to get more leverage without having to increase your, basically quantity of decisions, right? So at the level that we all trade at, like none of us are Warren Buffett, right? Or some, massive hedge fund. So the liquidity that we need to make money from the market is very different than what other people need, right? Like I can catch a 20-point move and that can make my month. Whereas for a big fund or like the company I used to work for, that doesn't pay commissions for the day, right? So it's a slightly different game when you get to this level. And because of what we need financially, liquidity-wise, to be able to make good money, there's almost like an unlimited amount of leverage available to us once that proof of concept has been created. And so trying to create that proof of concept first and then scaling up your accounts or your sizing or whatever will then really help you fly through any sort of like short-term P&L objectives you might have. And good work, Jay. So these are NQ futures. So my trade that I placed here today was NQ1, NASDAQ 100 E-mini futures. So this is the future. Let's go, Alfred. Hell yeah, $1,200 on the day. That's fantastic. Congratulations. We got some serious killers here, guys. I love it. All right, team. Final call for questions here. Final call for questions. I don't see myself placing any other trades here. Yeah, you too, Mike. Good week? Hey, my pleasure, Preet. Have yourself a great day. Hey, Matt, awesome. $400 here today. Passed your 150 eval. Started your second one. Beautiful. Starting to create that leverage. Congratulations. Nice, Jay. Congratulations, man. Looks like a great day for you. Really, really well done, team. Yeah, not an easy trading day at all. Not an easy one. No worries at all. Always happy to answer and make sure that you have all the information you need. But yeah, I'm never going to lie to you guys about my executions or anything along those lines. It's too easy to get caught in a lie. Like, price action doesn't lie. So, it's all good. It happens. Hey, Steven, another past eval. Congratulations. Man, so we got, what, 5 or 6 people passing their evals this week? That's awesome. I have no idea, Jay. I have no idea. I've personally never used the charting platform you use. When I do evals through prop firms, I try to do with Tradeovate, because Tradeovate allows me to execute inside TradingView. All right, team. Final call for questions here. Final call. Yeah, you have a great weekend too, Stephen. Congratulations, man. Honestly, very, very well done. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Good, successful trading session here, right? Avoided a lot of mistakes. Took the trade that was in front of us. Okay, maybe it wasn't the world's biggest P&L day, but I don't think we did anything wrong, anything we shouldn't have done. So all things considered, pretty happy with price action. Today, really focused on not dealing with what I dealt with yesterday, right? Where I left money on the table and like got greedy for price action. Today, made a plan, stuck to the plan, and behaved in control, right? That ultimately is a lot more sustainable and scalable than anything else, right? That could exist. So appreciate you guys all tuning in. For those of you who are DTR guests and you enjoyed your time here please reach out to your advisor. They'll set you up so that you're a part of the team here full time. Otherwise, have yourselves a fantastic trading day, and I'll see you guys on Monday. Hopefully, there aren't any setup issues on my end. If there are, it'll be a YouTube only stream, nothing in Discord, but I'll let you guys know. My desk is scheduled to arrive tomorrow, so hopefully no issues in setting that up. But yeah, I'll keep you guys updated and in the loop. So in the meantime, have yourselves a incredible weekend. Make sure to do something nice for yourself, for your family, or your loved ones. And we'll be back at it again here on Monday for what should hopefully be a successful trading day. So have a great day, guys, and we'll talk soon.